All right. Brokers Are Better Facebook community. We have Scott Rose from Class Valuation. He is the Chief Innovation Officer. I asked Scott to come on today for an interview to discuss all the changes that are coming out and have come out today from Fannie Mae and Freddie Mac. Even though Scott has, given us his time and is going to be on this interview with us today, please understand all of the changes that just came out today. And even though Scott's going to be able to communicate what those changes are, he's still, and Class Valuation is still working with their clients, lenders, to understand if there will be any overlays or any certain ways that different lenders are going to be actually implementing these changes. So, Scott, welcome to the Brokers Are Better Facebook Live. How are you?
I'm great, Anthony. Thank you.
Thanks for taking the time today. I know you guys have been hard at work. I've been on a couple text and email chains, and everybody's been waiting for sort of the announcements that came out today to be released. So I'll get started. First, let's start with Class Valuation. Have you made the adjustment to work from home? How is this impacting your business?
Absolutely. Yeah, I think like most businesses, as this all started to transpire, first things first was to ensure that our core operation was prepared to work remote in the event that that was something that came up as a requirement. So Class now does have 100% working remote capability. The majority of our people are working from home currently.
Got it. And as far as the impact on the business when it comes to ability to get orders assigned or turnaround times or any of the things that are impactful day to day to mortgage brokers, has there been any adjustments since this work from home has been adopted?
Not too much. I mean, knock on wood, I think, we've been very fortunate and majority of our orders have continued to process, pretty much business as usual, with the exception of some of the shelter in place moratoriums that have come up over the last week, starting in the San Francisco Bay Area and kind of spreading throughout the country and some other various markets throughout the time since then. But for the most part, turn times have remained consistent. And although everyone is busy, everyone is doing their part to try to keep things functioning right now.
So the announcement came out today. The announcement, the first time you guys saw the announcement was this morning, just like everybody else, correct?
Yeah, that's correct. The formal announcement for sure.
So let's get into that because these changes are, obviously the intention is to provide some relief to the market. I'm going to go ahead and just do a screen share here with the Fannie Mae announcement and the critical part related to what exactly they're changing effective immediately. So I have this, the Fannie Mae summary of the temporary appraisal requirement flexibilities.
Yeah.
Do you want to start running through this for mortgage brokers so you can explain how this impacts mortgage brokers, appraisers, and AMCs as well?
Yeah, absolutely. So, I think this is new. It came out this morning. I think a lot of people, I know, everyone is still trying to work through all of the complexities around this release. We know this is the industry's response to try to create some opportunity here in those markets where we are struggling to get appraisals completed due to the inability to get interior inspections, whether that's shelter in place or sick homeowners or whatever the circumstance might be, so that there are alternatives. And so what they have done, and both GSEs have aligned on their parameters for the most part. There's kind of two options here. I should say three. First option is really try to get the interior inspection done. In the event that can't take place and you have a purchase loan, there's a little bit more flexibility on the purchase, being able to move to a desktop appraisal solution. Again, this is something that would have to be worked through, and I would look for further guidance from your lender partners to understand how they would like you to proceed to be able to move into those products. But what we do know is that it will leverage the current 1004 or 1073 or whatever appropriate form by property type would be required. And it allows the appraiser to use some updated certifications to allow them to utilize that form and complete an appraisal utilizing information that's available on the internet, most likely from the MLS listing. And that's really the main reason I'm assuming they went to doing the desktop on purchases only, is because there's probably more available information about that property that recently shows photos of the inside of that home. Refinances look a little different. There's a few more loan parameter requirements on the refis. The one most importantly is that The loan has to be held currently with either GSE for them to allow these exception processes to take place. So if you have a loan that's being refied and you want to sell the loan to Fannie Mae using an exception process, that loan would have to currently exist with Fannie Mae today. And they are allowing for exterior only reports to be utilized. And they will use the forms appropriate, the 2055s, the 1075s, et cetera, to be able to perform those services.
So to clarify this real quick, first, two buckets are important for everybody to understand. Purchase and refi are clearly two separate ways that Fannie and Freddie are kind of viewing these things. On the purchase side, they're allowing for the flexibility for lenders to do a desk review, leveraging alternative data, meaning not your traditional pictures from an appraiser from inside of a home, but actual MLS photos, public record, or any available information that they have related to that property.
That is correct. Yeah, it's important to understand that they are requiring the appraiser to make a determination that they have enough relevant information available to them on the internet to be able to assess the interior condition and quality.
And at this point, we don't know because it is too early. This information just came out today, and we're expecting lenders to release direction at some point in the next 24 to 48 hours. But the expectation is that it would be the lender's discretion on whether an alternative report could be utilized, meaning if a desktop review could be utilized instead of a full appraisal. Is that correct?
That is correct. Yeah, because I think there's a lot of other things impacted from them more directly around, again, and I don't know all the details of this, so I don't want to speak to it too much directly, but reps and warrants and where the loan's currently held and all those complexities that they really need to be in the driver's seat around that.
And as far as you're concerned, when it comes to the purchase side, as far as appraisers go, there should be, this should help make their jobs easier, correct? Like at the end of the day, now they don't have to go out to the property. They can view the MLS and leverage the pictures on there. So their ability to turn reports around should be quicker. And there's less like field work, I would say. Is that accurate?
I believe so. Yeah. Right now, I think that this is a time where the country really, right, has to come together to work together through this time period. And this is just an opportunity being given us to be able to continue to operate within our business, which is important, that people can continue to, purchase homes and refinance, and appraisers can continue to work, and we can continue to function as an organization. And that's why this is being presented out there. And, the desktop isn't too much of a stretch. It's the same form that they're used to using. They can gather that relevant information online pretty easily in today's day and age and make the appropriate extraordinary assumptions, to use an appraiser terminology, the same way they would on an exterior only type product about that information.
And this is just obviously for agency. This isn't the directive from HUD or FA or the VA. So as far as property inspection, so if on a purchase contract, they said the buyer says they're getting a property inspection, they don't need to provide a copy of that report to the AMC or the appraiser, correct?
Not necessarily. I wouldn't surprise me if that's something that gets asked for in this process, if appraisers are looking for more information, but no, that has not been talked about directly.
Okay.
I really think that the information on the reason it was relegated to purchase, the appraisers could be using the information that's available on the MLS to their advantage.
Got it. And then on the refinance side, let's get into the weeds on that one. So basically what they're saying is if the loan is currently Fannie or Freddie, which generally speaking, you can either look that up on the Fannie Mae or Freddie Mac lookups on each of those providers' websites, or usually I'll say it on the credit report. But as long as it's a Fannie loan, you can go Fannie to Fannie, and a exterior only appraisal is going to be permitted.
That is correct.
And in as far as that goes, in the areas where there is shelter in place, are you seeing appraisers have any issues with doing exterior appraisal?
That's a great question. I don't think we're going to know the answer to that for a few more days as we start to get the feedback from our appraiser populace, from this recent release. I've thought about it personally, so I don't want to overly speculate here, but from my perspective, assuming you're healthy, if you're staying in your vehicle and staying out of contact of coming into contact with other humans, I think in the spirit of what we're trying to accomplish with this distancing protocol, that could be accomplished from your vehicle, right? You're not coming into contact with anybody other than having to fill your gas tank at the gas station. And you can take normal precautions there in terms of wearing gloves or, using some sort of sanitary wipe, et cetera. So I really think it could, right? As long as there's nothing more specific that comes out in those general markets that says you can't.
So as far as the exterior appraisal goes, the exterior appraisal, when they say a driveway, it's just literally a curbside picture, and that's all that's required. There's no like kind of going around the house or any of that stuff.
That's right. Yep. Front street view, maybe a side view of the property, just to show that you were there and that the home exists and is in reasonable condition on the exterior.
Got it. So as far as anything else, so if the current loan is not Fannie Mae owned, when I'm looking at this temporary appraisal requirements flexibilities, it looks like those loans are still going to require a traditional appraisal.
Yep.
If the not Fannie or not Fannie owned. So outside of that, when it comes to investment property, primary residence, second home, from what I can see, it looks like everything's applicable to all those categorizations. So whether it's a primary investment, it's same applicability.
I believe so.
What is your expectation on the FHA or VA side of things? Have you got any instruction or direction on that side of the fence?
Not yet. I believe that they've all been in discussions together, so I would expect that they'll probably follow up here soon. Shortly after this with their directives. As whether other specific portfolio lenders might have follow along with something similar as well. But right now, we don't have any further understanding yet from HUD, unless something's come out since we've been talking over the last 15 minutes to 30 minutes.
And what about as far as cost? Will the cost of a desktop be less expensive than a full appraisal, a traditional appraisal?
Yeah, so I don't think so. Right now, I think that really from a logistical perspective, and as an AMC, I can let you know that if the costs are staying the same, we're not going to increase our margins on that product. We'll continue to pay the appraiser. The appraiser still has to complete that same form at home. They have to do the same research, the same analysis. They have to spend more time online trying to understand things about that home and that subject property to be able to deliver the result. Is there some reduced time in not measuring the property or driving to the property? Yes. Is it worth bringing the price down in a time where we're trying to bring solutions that can be more streamlined, really just trying to keep things function? I don't know. But again, I think it's still going to take a little bit of time for the market to react to that, Anthony. And obviously, we'll be willing to work with our clients accordingly and support everybody in this process. I think the positive side that we can look at from the appraiser profession is that I don't think that anything that's being proposed out there is far outside the scope of what appraisers are capable and able to do today without any additional training or forms or other challenges that we would face. I think that the profession and the industry will be ready to support these changes and adjustments to try to keep things moving.
Great. So I have a couple questions here just from brokers in our group. One of them is, what about if you have a home that has improvements, substantial improvements that maybe an exterior appraisal is not going to pick up? Is that a situation where the only way to recognize that improved value is through a traditional appraisal, or is that something where additional information can be provided by the homeowner?
It's a great question. Trying to be careful how I answer this. I don't know what the expectation will be right now. Some of that will probably fall within what's comfortable for the appraiser. I assume some like a normal exterior, which these products used to get utilized a lot more pre-crisis, the last crisis, that those appraisers would sometimes interview the homeowner over the phone to understand if any improvements were made to that property that they could incorporate into their analysis. Could some photos be taken and sent to that appraiser, to leverage? It's definitely possible. and not out of the question.
If there's a couple of brokers that are asking, they have appraisals that were ordered in areas that were identified as shelter in place that are now on hold. What can they do to get those back on track if they fit into one of these buckets? Is that something they have to go through their lender on, or is that something they would directly go through class valuation?
I think right now we're looking probably to go through the lender until we have some further understanding of how they're able to change their process to support this. It's potential that some other guardrails or, directives could be given in terms of them coming directly to us, and that just really hasn't been worked through yet. But we are definitely anticipating deploying these however we possibly can in any areas where appraisals are on hold because of a shelter-in-place initiative.
Got it. And as far as your expectation on turnaround times or being able to execute on these orders, do you expect that, and this is a couple of people have questions about this, do you expect that now that there will be less of an interior inspection that you will see reports turn around faster?
I don't think it's going to hurt. I definitely think it's going to help. I think it's a little bit to be determined on how far backed up maybe some of those appraisers were in those markets. But we, surprisingly, Anthony, so far we've been monitoring our turn times very closely, and overall they're holding fairly tight to what we saw before all this took place. So, I don't think that's out of the question.
And just as far as mortgage brokers go, obviously, I think what we're going to deal with here is we're going to have some loans here that are sort of in this interim period that were either ordered or fall into the before these policies were announced situation where they're currently on hold. And then once the lenders provide some directive and instruction to the AMCs, we'll have complete clarity moving forward. For anybody that's in this current holding pattern, would you recommend, just so that they are proactive and that they stay ahead of this situation as much as possible, would you say, hey, put a message through your portal with, asking how this is going to be handled, or if a desktop review is applicable? How would you instruct them to stay ahead of this and push this forward?
Yeah, so I think the best thing to do is to wait to hear further information from us and from the lenders. I can tell you that we're monitoring this. We've been monitoring it all weekend in preparedness for these announcements to come out. As soon as we have more clear understanding in terms of how we can make this as simple and as clean as possible, we will send out more mass communications to anybody that has orders in the pipeline currently with how best to proceed. I think that's probably the best way to handle it for right now. And I would expect this is something that we should know a lot more on in the next very near term, next couple of days, 24, 48 hours.
So I'm just going to add the temporary appraisal requirements flexibilities one more time so we can just cover it for everybody one last overall time. So we have two buckets here. We got basically purchase transactions and refinance transactions. On the purchase side, it's pretty straightforward. If a traditional appraisal is the go-to, if that's available and all conditions permit for a traditional appraisal to happen. If not, a desktop appraisal or an exterior only appraisal are the two listed options here. Is that correct?
Yes.
On the refinance side, if a loan is currently owned by Fannie, going back to Fannie, then either obviously the traditional appraisal is the go-to, but if not, an exterior only appraisal would be an alternative.
It would be an option if they're unable to get in for the inspection.
Got it.
Yeah.
And then if the current loan is not owned by Fannie or Freddie, then a traditional appraisal is going to be required.
Yes.
So everybody, we're going to go ahead and we're going to share the Fannie and Freddie links to these guidelines with the group. We'll share that in the on the AIME social pages. We'll also be sharing it in the comments on this thread. But these are the official announcements that came out today from Fannie and Freddie related to appraisals and what the alternative options are during this period of time. And I think what we're going to do is we're going to let Scott, kind of connect with all of our wholesale lenders over the next couple of days and then circle back with us either at the end of the week or the beginning of next week so we can have a clear directive so everybody's on the same page with what is to go forward on all these things and making sure all lenders are adopting the same mindset when it comes to them.
Sounds great.
So, Scott, the only last thing I would say is any guidance that you could provide to the broker community. As you know, it's a very fast-changing environment. Appraisers in local markets, depending upon the market, are obviously being impacted. Anything you can provide on behalf of the AMCs and appraisal community, just provide some guidance to them on kind of what you guys are dealing with.
Yeah, no, I appreciate that. I think right now, again, just stay alert to the information that we're providing out there. We're trying to be very proactive right now and giving out as much information as we can and working together with all the stakeholders involved to make sure that we're here to support the industry through this time. Be patient, obviously, in some of these areas that have a more drastic effect than others. In certain hot spots, there's probably a bit more discomfort there for appraisers wanting to go into homes and put themselves at risk of contacting someone with the virus, and homeowners feeling the same way. So we're just trying to keep everybody in mind and ensure that we continue to have solutions to help you all continue to close loans, and making sure that keep this limit the impact as much as we possibly can. And just know that we're all working, all hands on deck, all day long, 24/7, working together with all of our partners to try to make sure we bring in solutions to everybody in the market.
Well, Scott, thank you very much. Again, broker community, Scott Rose, Chief Innovation Officer at Class Valuation, bringing an update on the Fannie Mae and Freddie Mac announcements today on alternative options for credit. Scott will be returning at some point here in the next week to give us more updates. But thank you, Scott, for taking the time. Thank you to Class and the team, and we'll look forward to talking to you again very soon.
My pleasure. Thank you, Anthony.
Thank you, sir.